Check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
We're limited to 20.
Check 1, 2, 3, 4, 5.
We got 1820 top on 16,000 shares. Last sale 1825.
Check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Great. All right, live is on. Check 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Copy that. I'll let them know.
Hey, Jeff for 12, any other second question? Yep, you got it. Yeah, good check. They're a little swamped, but I told them about the other thing that we're doing. Oh, I'm sorry, am I keying? The gain on wireless lav 1-1. They said it's the only way to bring it up a little bit higher. Copy that. I'll pass it along.
Vast, the top. Hi, I'm Shara Price John, the CEO of Build-A-Bear Workshop, and you're watching Taking Stock.
Two minutes to go into the close and mark this the fourth consecutive day of a little bit of profit trading here on Wall Street, despite the fact that the major market indexes opened today's session in positive territory. Sellers clearly dominating the breadth of the tape, pretty broad-based participation to the downside. It does look as if we will finish right about at session lows currently, with about 90 seconds to go or so in today's trading action. The S&P 500 expected to finish down about 1.1%. Energy, staples, materials, those are, however, your defensive risk-off leaders in the S&P today, and we are seeing losses to the downside led by tech shares, industrials, and utilities. That and so much more sets the stage for today's show, and welcome to it. You're watching Taking Stock. I am back for action today here on Wall Street. I'm your host today, JD Durkin. We are just moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. The Anti-Defamation League and JLens set to do the honors. Volatility and yields both up a little bit in the session today. Metals continue to track a little bit higher, with silver reclaiming $66 an ounce on the day for a fresh all-time high. Oil benchmarks in positive territory. Really, oil and energy stocks very much catching a bid on this particular trading Wednesday. ConocoPhillips, the strongest performing stock out of that particular group. ADL and JLens here at the NYSE, set to bring about a close to market action. Jonathan Greenblatt is on the show. We'll talk with him in just a bit, but for now, time once again for the iconic closing bell. And with the three gavel strikes on the iconic sounding block at the New York Stock Exchange, officially bringing about a close to today's price action. Final tail of the tape for this Wednesday, December 17th. The S&P 500 will sell off 1.1%. The Dow 30 components down, let's call it 0.5%. The NYSE Composite Index down about 0.4, and the small caps down a full percent. Advance to declines, about two decliners across the tape for every one advancer. Breadth decisively negative, I should say. Sellers firmly in control. Why listen to me rattle on about it? We've got a true professional, the great Michael Reinking. He is senior market strategist at the New York Stock Exchange, wearing an orange tie, not for Bitcoin, but how about them New York Knicks, my man?
Yeah, I mean, look, there's only a couple days a year that I get to wear this bright orange tie. Halloween, and for a franchise that's had a couple rough years, bringing home the NBA Cup was a perfect time to pull it out of the closet.
And we're all hoping that next June, when the Knicks win it all, you can once again bust it out of the closet.
Exactly.
Can I get your take here? I mean, we oftentimes, when we see the broader S&P finish at session lows, sometimes that can lead to a gap down for trading tomorrow. What did you see in terms of price action flipping decisively from positive to negative today?
Yeah, so I mean, once again, we continue to see some fracturing within that AI trade, right, and that really kind of led markets lower. We continue to see the technology and the AI complex, really underperforming. We've seen kind of a broadening of the rally. We did see broader weakness today, right? But as you pointed out, you saw some of the more defensive areas of the market outperforming. Now, in terms of the S&P 500, right, we did break the 50-day moving average, right, which is kind of a medium-term moving average, which a lot of kind of quantitative-based models kind of focus on. So we broke that, extended to the downside this morning, and then Friday, right, we have quad witch expiration and the quarterly index rebalances. Right, that's the last very big liquidity event of the year. Right, we saw a big closing auction, a weakness into that closing auction today in preparation for some of that. Right, so we could see a little bit, some more volatility in the next couple of days.
Yeah, let me skip ahead to Friday's options expiration because it's a big deal here at the New York Stock Exchange. I don't know how many average retail investors closely track that sort of stuff from home. What do we usually see for a day like that?
Yeah, absolutely. So what we'll see is increased auction sizes. Right, so that's quad witch or triple witch expiration is the expiration of index options, index stock options, and index futures, right? And what we do tend to see is very big opening auctions, and then the closing auction will on these quarterly dates exceed 1 billion shares into that closing auction, right? We've seen historically large closing auctions over the last couple of years, continuing to break records, kind of year over year.
Can I get your perspective on the biggest catalysts on your radar as we head into 2026? We're done with the Fed, at least for now, but a few more key pieces of economic government-based data maybe to chew through, and maybe sets the stage for a Santa rally starting around Christmas Eve or so.
Yeah. So that Santa Claus rally is scheduled to start next Thursday, so a week from today. Kind of pay attention to that. The last 5 trading days of the year, and then the first 2 of the next year. But in terms of kind of catalyst, right? We have the big liquidity event on Friday. Tomorrow we have CPI. Right now, that was right on the back of the labor market data that we got yesterday. Right, that was some mixed data. Right, a little bit of something for both doves and hawks to chew on within that data. Right, but the idea that Fed Chair Powell kind of told you that there were going to be large distortions in a lot of this delayed data, I think de-emphasizes it a little bit, right? But we are going to get another round of data ahead of that next Fed meeting, in January. So I think that's really kind of the more important thing to focus on from a monetary policy perspective.
Something I like to look at this time of year is how accurate were the price target projections from analysts on Wall Street 12 months ago with their expectations here for 2025, and also what do they see for the tail of the tape for 2026? How closely do you track those price targets? Because they get talked a lot about, and obviously you got the bulls, you got the bears, and you got everyone else kind of in the middle.
Yeah, and so, look, I mean, I think that's it's like a one point in time, right? So it's kind of hard to kind of grab that one point in time. I'd say, generally speaking, right, the street was pretty positive coming into this year. I think they got the sequencing of, kind of how things played out a little bit wrong, where we saw, there was this expectation you would see a strong first half of the year and some weakness potentially in the back half. It was actually flipped, with all of the policy turmoil that we had earlier this year. Kind of at this point, right, there's, pretty broad-based, kind of bullishness across the street again, kind of this year. That's really kind of being driven by the fact that we have kind of supportive monetary and fiscal policy, right? And we're looking to see some expansion of of earnings, and the earnings profile, right, has really been the driver of much of what we've seen over the last couple of years. I think the one thing that kind of concerns me, there's 2 that concern me from that perspective. A, the amount of bullishness that we do see. And B, if you look at the 4-year presidential cycle, the midterm election year does tend to be the worst of that 4-year cycle.
Yeah, that's really worth noticing, especially if we get a little bit closer soon enough to the really midterm election cycle. We're not really there yet in the news cycle, but once we get to January, February, we're invariably there. The great Michael Reinking, senior market strategist at the NYSE New York Knicks, super fan, my man. Thanks for being here.
Thanks for having me.
Josh will grab your mic. Jeff, you and I are going to head this way and go for a walk. Let's squeeze through. Hey, Judy, what's going on? All right, now we'll bring you the update event contracts from our friends over at Polymarket, as participants on Polymarket are trying to wonder who will close the highly touted, much talked about Warner Brothers Discovery acquisition. Some news on the day that kind of shifted these odds in Netflix's favor. Excuse me, folks, I'm going to squeeze right through, pardon me. 76% chance it is in fact Netflix, 15% chance Paramount Skydance will be able to land the plane on this deal, 7% chance there will be no acquirer for the deal, at least by June 30th, 2027, 3% chance it is Comcast. Today, Warner Brothers Discovery advised their shareholders to basically reject the deal from Paramount Skydance in favor of what they call the far superior deal out of Netflix. Odds flipped on Polymarket in response. Buckle up for how that story unfolds. All right, Jeff, we'll take a look at 2 NYSE notables here to round out the segment. First up, the team from Chipotle. Very strong tail of the tape today, up almost 4%. The stock trading back up to its highest level since October's big gap down. Shares are trading back above its 50-day moving average, still down almost 40% or so from the start of the year, but the average 1-year price target on Chipotle stock sits at $43 a share. That suggests upside potential from these current levels of about another 16 or 17 or so percent. Finally, in honor of National Maple Syrup Day. Yeah, that's a thing, and it's today. Shares of J.M. Smucker having a pretty good session, up about 0.7. The stock has been very range-bound since July. 98 on the support level, about 110, 112 or so on the upper band of resistance. The company did miss earnings the last 2 quarters, and shares of J.M. Smucker are down 8% from the start of 2025. The New York Stock Exchange's, Money 2020's very own, Scarlett Sieber, now breaks down what tokenization actually means. Take a look.
Welcome back. I am Scarlett Sieber from Money 2020, and this is Jargon Translator, where we break down the finance terms that sound fancy but actually change the game. Today's word, tokenization. No, it's not about arcade tokens, although those are pretty cool and I like my arcade games. It's actually about flipping finance on its head. Imagine owning a piece of a Picasso or a skyscraper instead of the whole thing. That's tokenization. It's the process of turning real-world assets into digital tokens on the blockchain. Why is this a big deal? Because it makes expensive stuff accessible. Instead of needing $10 million for a building, you can buy a fraction for $100. It's like splitting the check at brunch, but for real estate, art, and even stocks. Tokenization also makes trading faster and more transparent. No middlemen, no paperwork, just blockchain receipts, baby. But here's the catch. Regulation hasn't fully caught up. So while the tech is fire, we know that, the legal side is still loading. So next time you hear about tokenization, remember, it's not about arcade tokens. It's about democratizing ownership. That is your jargon translated. Back over to you.
Let's do it, folks. Welcome back to the broadcast. Time now for a few fintech, crypto, and AI-related headlines for your Wednesday, December 17th. First up, the crypto majors all in negative territory today. Bitcoin down about 2%, falling back down to the 85 and change thousand level. We'll track that the rest of the week. And other news that we are following for you here with regards to fintech notables, Reuters reporting Amazon's in talks to invest around $10 billion into OpenAI. It's a deal that could value the AI giant at more than $500 billion. And finally, Oracle shares falling. Are they ever? After reports that Blue Owl Capital will not, after all that, will not back a $10 billion data center project for OpenAI, although according to Oracle, the project is still moving forward. We'll see how that plays itself out. Say hello now to our next guest. This is Stephen Sykes. He is the COO at Public.com. He joins us here on the trading floor of the New York Stock Exchange. My man, thanks for being here.
Thanks for having me. Excited to be here.
Quite the day and quite the brokerage and quite the platform that you and the team at Public have built and scaled steadily. Talk to me first and foremost about how you've seen kind of the general flow of what's called an agentic brokerage evolve in 2025 and what it means for Public next year.
Yeah, I mean, listen, we've built Public to stand for serious investors and help people that really want to have great outcomes in the markets. And I think one of the things that we keep hearing as people start to experiment with generative AI, LLMs, is that they want their brokerage to operate kind of how their sort of ChatGPT, their Gemini, their XAI, how Grok works, right? And I think they want to be able to have this generalizable platform. Hey, I want you to monitor my bank account, and if it gets above a certain level, I want you to sweep some money and buy my favorite stock or invest in my overall index strategy, whatever it is. And I think what we're working towards is building a platform that sort of supports that generalizability. Instead of always having to think of every single thing that every member wants, every feature, and really build that into the platform, we're going to give folks a UI that lets them use all of the breadth of our platform to have sort of exactly the outcome they want.
Stephen, do you have a personally favorite way that the company has used AI to really reach retail investors where they are?
Yeah, I mean, I'm a huge fan of our generated assets platform, right? Hey, I have a trading account, do a little bit of trading, but really at my core, I'm a long-term buy and hold passive investor. But because the industry I work in, I have a lot of points of view around exactly who and what kind of companies I want to be invested in. For instance, I have a long thesis that I've held for a long time about founder-led companies, right? And hey, finding an ETF that matches exactly that thesis is tough and doesn't really exist. So I've used generated assets to build a founder-led index, totally customized to exactly what I want. I get to go in and tweak the individual names and the allocations, and I get to continually invest in that index, and it tracks it over time.
Oh, that is very cool. I love that. Talk to me a bit more about what you're seeing in terms of retail investor appetite and interest, specifically in things like cryptocurrency-based products. I'd have to imagine as the conversation has really heated up here in 2025, that kind of changes a little bit for the average user on Public.
Yeah, totally. I think when you started out today, you said, hey, most of the crypto majors are down, right? What we've seen from crypto investors over the last few months and retail as a whole is that they're really shifting towards quality and buying some of these dips. Like if we look at the last couple of months, if we look at October and November, those were Public's the two of the three best months we've ever had in terms of Bitcoin net flows, right? Net inflows into Bitcoin, right? Trading volumes are about where they've been, but what we see is it's all on the buy side, right? Everyone is sort of buying these dips, continuing to buy heavily into the high quality crypto assets, and that's come at the expense of the meme coins, the more speculative trade, the more active trading in crypto, which is a really interesting trend leading into next year and one that we see continuing.
Stephen, there's been an interesting narrative here on Wall Street this year, which if you go back to the Liberation Day lows of Monday, April 7th, that institutional dollars kind of backed away from the market, but it was retail investors who said, no, I want some of this action. Now that the rest of the year has basically played itself out, is that what you saw from the users on your platform?
Totally. I mean, again, it's I think our investor, right, digitally native, sophisticated, really wanting to have the best outcome they can, like they've been trained over their lives to buy the dip, right? We're approaching or at all-time highs across the major indices, and like every time it goes down, we've achieved a new high. And so I think we've taught retail investors to continue to buy the dip, and they do across the board, whether it's crypto, like I just said, whether it's in full indices, or whether it's even individual names.
Stephen Sykes is the COO at Public.com. You and the team from Public are always welcome here at the Exchange and on the show. Thanks for being here.
Yeah, thanks for having me.
Really appreciate it. Folks, don't go anywhere. Much more Taking Stock coming up live from the New York Stock Exchange right after this. Welcome back to the broadcast, one and all. You're watching Taking Stock, still live from the trading floor of the New York Stock Exchange. Time now to the show to give you a few updates in the worlds of startups, raises, and rounds you need to know on your Wednesday, December 17th. First up, Reuters reporting Alphabet's driverless robo-taxi startup Waymo now in talks to raise billions of dollars at a fresh valuation of at least $100 billion. Next up, Radiant Nuclear raising more than $300 million to scale its 1 megawatt truck-delivered microreactor. This as investors pour capital into more nuclear-related startups. And finally, at this hour, Bloomberg reporting SpaceX has told employees to pause public commentary as the company enters a regulatory quiet period. Certainly a signal the company is planning to move closer to Let's try that again. Welcome back to the show. You're watching Taking Stock here live from the trading floor of the New York Stock Exchange. Time now to say hello to the great Jonathan Greenblatt. He is the CEO of the Anti-Defamation League, who just rang the closing bell here at the New York Stock Exchange, and I just found out is actually making his first ever visit with us here at the big board.
It's true. Super exciting. Like bucket list moment. Like really, I'm absolutely thrilled to be here.
Can I ask you first and foremost,
Sure.
the experience for you and the team from ADL to be down here
It's
doing the bell?
remarkable. It's remarkable. I mean, the idea of launching an ETF, the idea of getting into like the capital markets was like a dream a few years ago. Now to be here, ringing the bell, being on the floor, it's just terrific.
Yeah, we got the ticker symbol for the new ETF. It is TOV. It's up
TOV.
here all over
That's
screens
right.
of the big board. What should people know about how this came together and really how you view it as a core financial investment product for the
Well, look,
community?
I think the reality is that we got to fight hate on all fronts, online, offline, like in classrooms and in the capital markets. And we've seen the rise of this thing called the BDS movement, sort of targeting Jewish businesses, targeting businesses focused on Israel. Our goal was to push back. And how are we pushing back? Like we're buying the S&P, but we're trying to convert our investors into activists. So getting into the shareholder advocacy space. And so in the last 2 years, we've been involved in hundreds of proxy votes. We've pushed back on 7 different anti-Israel resolutions. We're showing up at shareholders meeting and we're making a difference.
Talk to me about how you see this moment that we're in right now for the Jewish community, not just here in New York City, but all around the world right now.
It's a complicated moment. I mean, it's just a few days since the massacre at Bondi Beach. 15 people were killed for the simple crime of celebrating Hanukkah on a public space. You know, there was a drive-by shooting at a Jewish home outside of Los Angeles on Friday night. We had a near riot in Amsterdam on Sunday evening. I mean, something is going on. Anti-Semitism has skyrocketed. And yet, the best thing we can do is to push back, not to retreat, but to lean in, if you will. So that's what we're trying to do at ADL, fighting anti-Semitism on all fronts.
What do you hear in terms of feedback from members of your community? I watch so many of your media interviews across different outlets, and I know how near and dear this is to you, and you're out there, and you're making the case and fighting this fight every day. What has this year looked like, if you don't mind me asking, in terms of people coming to you directly about their concerns?
Look, it's a challenging year. So the year started off with all the encampments on the college campuses. The year started out with all the craziness around Elon Musk. The year started out with just continuous anti-Semitic acts of harassment, vandalism, and violence. But I think people feel hope. People know that the ADL is showing up for them, that we're not leaning back, we're leaning in. People know that we're protecting, advocating, and educating, and not allowing the anti-Semites to win. So this is the thing. Bigotry will rear its head unless you beat it back. So that's what we're trying to do. The Jewish community and other communities, we're all in this fight together.
Coming up in just a bit outside the New York Stock Exchange, we've got the lighting of the menorah. Can I
how
ask you
cool
a bit
is that?
personally what this holiday kind of means to you and members of the community, and what you want someone watching this broadcast to remember as you celebrate Hanukkah?
I got to tell you, like Hanukkah has been going on for thousands of years. It celebrates Jewish resilience. And in this moment, you know, the nights are long, but light dispels the darkness. And so Hanukkah recalls the miracle of, again, Jewish resilience. And tonight here at the New York Stock Exchange, outside on Wall Street, we're reminding people that the Jewish people aren't going anywhere. And there's this notion of Am Yisrael Chai, the Jewish people live forever.
We are wrapping up 2025 in the next couple of weeks. Before I let you go, what would you say are among your top priorities for the Anti-Defamation League and the broader community that you represent for the new year?
Look, so the Jewish community, we got to stay strong. We got to push back on anti-Semitism and not allow anti-Zionism or any form of hate to be normalized. At ADL, we're implementing generative AI solutions to kind of deal with the onslaught of hate. We launched the TOV ETF. We're looking at other innovative financial products to show up in the capital markets and make a difference. And we're trying to find new partnerships to build, to bring other communities together to push back on intolerance.
Jonathan Greenblatt is the CEO of the Anti-Defamation League. The ticker symbol, by the way, is TOV right here at the New York Stock Exchange. All the best for the Hanukkah holiday and beyond. Thank you for joining us.
Thank you so much. Appreciate you, your audience. Have a happy holidays and a great new year.
You as well, Jonathan. Great to have you here on the show. Folks, don't go anywhere. Much more Taking Stock coming up live from the big board after this.
Vast, a top player in the commercial space industry, has a vision, and that's for humans to live and work permanently in space. And here to share more about it is Max Haut. He's the CEO of Vast. Max, welcome.
Thanks for having me, Ashley. Great to be here.
Of course. So what is Vast?
So we are a space station builder. We want to be the company that creates the world's first commercial space station, Haven 1 launching next year, and then to have the chance to succeed and build a successor to the International Space Station for NASA. So, in a quick summary, we want to be the best builder in the world, in the universe, of any human habitat in space. That includes space station and habitat on Mars and Moon.
You mentioned Haven 1, Max. What is Haven 1, and what role does it play in your broader vision of humans living and working in space?
So no one has ever built a commercial space station. The current space station is incredible. It had permanent humans for 25 years, and it's been safe. But what it is not is low cost. It's not sustainable. It's one of the most expensive, or the most expensive object ever built by humanity, about 150 billion for a single object. And so what we need a transition to commercial that is sustainable and lowers the cost of space stations so that they can be there, sustainable and save taxpayer money. The Vast approach that's unique is that we don't think we should have a station that replaces the ISS in the first go. We need stepping stone. So our first stepping stone is our demo satellite. You can actually see a picture from it taken a few days ago. This is our control room where our operators are managing our demonstration satellite, which is everything that the space station will have, excluding the human element, so the cabin and the life support system. So that allows us to de-risk our technologies. And then Haven 1, as you ask, is our first space station. It's a single module space station launching next year on a SpaceX rocket. And then a crew of 4 on a SpaceX Dragon spacecraft will visit it for 2 weeks or more as early of next year. And so that will be the first time there's a new space station for America in addition to the ISS. And it will be the first time any commercial company has created a space station.
And how are you preparing for Haven 1? I understand that you ran a test. Can you tell us more about that?
So, well, obviously the demonstration satellite was the first thing, but that's now in orbit. And at the same time, we've been designing and building the Haven 1 design and the facilities and the actual spacecraft that will go to space next year. So we just completed building the primary structure. That's the hull that basically the crew is inside in metal. And what's unique about us is we do it in-house in America in a speed of about 6 months, when some of our competitors are buying it from third party in Europe, and historically takes years. So we do it at a much lower cost, vertically integrated, and we finished it and we've acceptance tested it for Haven 1. The next step is we do the integration. So that's when our technician in the clean room are integrating all the pieces inside and outside before we can launch it from the Cape on a rocket, on a SpaceX rocket next year.
All right. And that leads into my next question. You talked about what differentiates you from your competitors. Can you elaborate on that?
The first thing that differentiates us is out of our competitors, we are the only one that have operated their own spacecraft in space. That's our demo satellite. So that's already a big differentiator. It's not yet a space station, but it de-risks a lot of the technologies that we need in the space station: propulsion, avionics, ground control, ground software, flight software, and so on. The other differentiator is that we are building and launching Haven 1 next year. I think we are years ahead of our competition. We'll see in reality how that fares out. And we are doing it in a very vertically integrated way. And so that's unique. We are not waiting to win the NASA contract to go ahead. We're ahead, and we'll be demonstrating to NASA and the world that we have the world's first commercial space station as early as next year.
All right, Max Haut from Vast, thank you so much for joining us.
Thank you for having me.
Watching. There, we'll try that again. Welcome back to the broadcast. You're watching Taking Stock, now live outside the iconic New York Stock Exchange ahead of the NYSE's annual menorah lighting, which we'll bring you ongoing coverage of here in just a bit. First, a little bit of late breaking news here in the day we want to update you on to. Acting CFTC Chair Caroline Pham is set to join the company MoonPay. MoonPay, a financial services firm we cover here on the show a lot, and she will become MoonPay's new Chief Legal Officer and Chief Administrative Officer at the end of her current tenure. Get you quickly update on what to look for tomorrow here on Wall Street. It's actually a pretty busy one, despite the fact that we're just days away from the heart of the